In this video, I'm going to share with you money protection and guarantees for your retirement explained. I get the question all the time, what type of protection and guarantees are out there for my retirement income? So I put together a short little presentation that I'm going to share with you the different types of retirement products and what type of guarantees or protection that they have for you. So let's go ahead and check this out. So as we jump into this, first and foremost, as always, one of the things that you always want to make sure that you're doing is working with your financial professional. Everyone has a unique set of circumstances, different retirement goals, and it's really important to be working with your financial professional or somebody that understands your unique situation so they can coach you and guide you, all right? So this is for educational purposes only, so that's my disclaimer. Anyways, what are the types of guarantees? Well, there's two types of guarantees that we're going to be talking about here to help educate you. One is performance or rate guarantees, a guarantee that a product will perform at a minimum or a fixed rate. All right, that's a performance guarantee. The other type of protections that you have in place are insolvency protection guarantees. Now, this protects a portion of your money, typically up to a limit, if the institution that your money is with becomes insolvent or cannot meet its obligations. So, for example, your checking and savings accounts are FDIC insured up to $250,000. And here's the website link. In fact, I'll put all these links in the description below so you can check it out. So that's FDIC insurance. Life insurance and annuity products, there's also a guarantee there through an organization called NOLGA, and we'll talk about that. Your stocks, bonds, mutual funds, they are protected through SIPC, protects against the loss of cash and securities held by a customer at a financially troubled SIPC member brokerage. And there's a link to that. And again, we're going to talk about each one of these so you understand each one of the vehicles and you can have greater control over your retirement. And a big part of you heard me say, it's important that you take 100% control of your retirement. What do I mean by that? Well, I mean that first is creating awareness of that you understand all the various types of retirement products out there. So as you're looking to build your retirement income portfolio, you can take advantage of all the bright products that are suitable for you. But at the same time, you understand the risks that are associated with each one of the products. See, many people, they just simply go with their employer-sponsored plan, whether it be a 401k or a pension plan, and that's it. They don't do anything else. It goes into a targeted date fund, and that's it. And then they hope that they've saved enough so that when they go to retire, they're going to have enough to retire financially happy. Well, that is not the case for many people. So this is why these videos are important. So before we move on, do me a favor, go ahead and hit that like and subscribe button. That way you're notified each time we come out with an educational video like this. But let's go ahead and jump into this. So FDIC insurance. All right, you're probably familiar with that. You have a checking account, savings account. You'll see the little plaque when you go to your bank. FDIC insurance covers up to $250,000 for a checking, savings account, money market, that type of thing. Okay, and so pretty self-explanatory. Now, depending on the type of an account, like your 401k or 457 or 4, it may not be covered by FDIC, okay? So that's important to know. Again, that's why it's always important to work with your financial professional so you understand what guarantees are in there. And the reason this is important, we're in a time where there's a lot of uncertainty. The market is up, the market is down, companies going bankrupt, companies laying off right now. Anytime you have a lot of uncertainty, there's a lot of changes, a lot of movement, that's where you're more at risk. And I'm going to share with you here, and we're going to talk about GM. Yeah, General Motors, which is now Government Motors, back in 2008. What happened, right? Huge company, right? Everybody thought it was solid. Many people, the uneducated person that had their money in a fund or in a GM stock basically got wiped out. So NOLGA guarantee. So what happens when a life insurance company fails? And the reason this is important is because annuities are popular along with cash value life insurance like a whole life or an index universal life. Many people will say the uneducated, well, there's no guarantees. What if the company goes belly up? Well, there are some guarantees in place. So this organization here, NOLGA, which is the National Organization of Life and Health Insurance Guarantee Associations, each state has an association that is part of this. And here's the guaranteed coverage that you have in place. $300,000 in life insurance death benefits, $100,000 in cash surrender or withdrawal values from life insurance, $250,000 in present value of annuity benefits, including net cash or surrender values. All right, so that's in place. So if the company goes belly up, there is a level of protection here provided through NOLGA. All right, so the other organization that provides protection is SIPC. SIPC protects against the loss of cash and securities. So this is not the same as your FDIC, such as stocks, bonds held by a customer at a financially troubled SIPC member brokerage firm. Just like your bank, you're protected if they are a member of the FDIC, right? So SIPC protection is $500,000, which includes $250,000 limit for cash. All right. So a couple things I just want to highlight here. And again, the link will be in the description so you can go read this on your own and learn more about it. So a couple key things here. SIC protection is limited. It does not protect against the decline in value of your securities. All right. So that's important to know because there are some people I've heard before that, oh, you've got SIPC protection out there. Well, it doesn't protect against the value of declines. It's not a performance guarantee. It's an insolvency type guarantee. If that brokerage firm, right, becomes financially troubled. So it's an insolvency protection. It is also important to recognize that SIPC protection is not the same protection for your cash at an FDIC insured corporation or banking institution, okay? Investments in the stock market are subject to fluctuations in market value. SIPC was not created to protect these risks, all right? This is taken directly from their website, all right? So instead, in a liquidation, SIPC replaces the missing stocks and other securities when it is possible to do so. And it is not always possible, all right? So let's take a flashback to the financial crisis of 2008. So it was that time period that triggered GM to file for bankruptcy in 2009. And when that occurred, most of the common stock shareholders were completely wiped out. The SIPC did not protect against that, okay? FDIC does not protect against that. The reason this is important, you need to understand the importance of having control of your retirement, knowing what you have, knowing what the risks are, whether it's the insolvency risk or the performance risk. A stock, bond, or mutual fund is not a contract with a company, all right? And so you're subject to market losses. But let's take a quick look here at some very high level, some products. If you're looking at an annuity, a fixed index annuity, or a MIGA, which is a multi-year guaranteed annuity, it's a fixed annuity, or a 403B, this is a contract with an insurance company. Many of the companies have in their language that a guarantee, a principal protection guarantee, meaning you have no market risk. Now, not all companies and not all annuities are the same, so make sure you read the contract, make sure to work with your financial professionals so you understand the limitations with that, all right? And you have the insolvency guarantee protection through NOLGA. And again, check with your state. Each state is different, but most of them have this $250,000 protection. Now, your cash value life insurance, this is whole life, universal life, index life, those type of products. Again, that is a contract with an insurance company. And so oftentimes there will be some type of a performance guarantee that is built into that language. Each product works differently and performs differently. So again, it's important that you understand so you're in control, all right? But with these products, there's no market risk because your money's not in the market. Even if it has an index, that index is just linked to your index universal life, for example, so that the company can base the performance and apply the interest crediting to your account. All right. But there is some protection with that, no market risk and potential for growth. You also have NOLGA protection with that. Now your stock market products, your stocks, bonds, mutual funds, those type of things, it's not a contract. There's no performance guarantee with that. Your retirement income or your retirement portfolio is subject to 100% market risk. Now you have the SIPC protection for insolvency protection in certain situations. All right. Again, with the GM, that didn't apply in that situation. All right. So anyways, I hope this helps provide a little more information for you, but I always recommend that you take control and you do some research on your own. Again, these links will be right here in the description below. Now, my message to everyone, take 100% control of your retirement so you can position yourself to retire happy. And before you leave, make sure to hit that like and subscribe button so you're notified each time we come out with a video like this, because we certainly want you to retire happy. That's what it's about, right? Have an awesome day. Take care.